All right, everyone, buckle up because the crypto world is absolutely exploding with news today, and you need to be in the know. The pace is blistering, the markets are volatile, and if you're not plugged into the pulse of it all, you're going to miss out. We've got massive shifts happening, indicators flashing, and strategic moves that could redefine the landscape. From institutional players making waves to critical on-chain data painting a vivid picture, it's all happening right now. Get ready for the most important updates you'll hear all day, because the future is unfolding at lightning speed, and we've got the inside track. Let's dive in. First up, we're seeing a fascinating dynamic where Ethereum is capturing significant institutional attention, even as Bitcoin whales appear to be repositioning. What does this mean for the broader market? We'll break down the flow of capital and what it signals for the major players. Then, we're diving deep into the on-chain data for Bitcoin. Investors are bracing for what could be a crucial test, as the king of crypto is hitting some key weakness indicators. Is a major shakeup on the horizon, or is this just noise? We've got the detailed analysis. Next, a major prediction is hitting the airwaves. A prominent analyst predicts Bitcoin is set to benefit hugely from a strategic inclusion in the S&P 500. We'll explore what this integration could mean for Bitcoin's future and its accessibility. And finally, we're looking at the very fabric of Bitcoin's scarcity, how institutional supply absorption is being eyed as a major catalyst for price appreciation. Is this the key to unlocking Bitcoin's next big move? We've got all the angles covered. You don't want to miss a second of this. Make sure you hit that subscribe button, turn on notifications, and let's get this episode started. Institutions eye Ethereum amidst Bitcoin whale movements. As the digital asset landscape continues its rapid evolution, a significant shift in institutional interest is becoming apparent, with Ethereum increasingly capturing the attention of major financial players. This growing appeal for Ethereum comes at a time when observers are noting substantial rotations among Bitcoin whales, entities holding large quantities of Bitcoin. These movements suggest a complex interplay of strategies and a potential rebalancing of portfolios within the crypto market. The influx of institutional capital into any digital asset is a critical indicator of market maturity and growing acceptance. For Ethereum, this heightened interest could stem from various factors, including the ongoing development of its network, the increasing utility of its smart contract capabilities for decentralized finance, DeFi and non-fungible tokens, NFTs, and perhaps anticipation surrounding future network upgrades. Institutions are often drawn to assets with robust technological underpinnings and clear use cases, which Ethereum has been steadily building. Simultaneously, the behavior of Bitcoin whales is a closely watched phenomenon. These large holders can significantly influence market dynamics through their trading activities. When whales appear to be rotating their holdings, it could signify a variety of strategies. Some might be diversifying into other assets like Ethereum, seeking potentially higher returns or different risk profiles. Others might be rebalancing their Bitcoin positions, perhaps taking profits or adjusting their exposure based on market sentiment and macroeconomic factors. The specific nature of these rotations, whether they involve selling Bitcoin to buy Ethereum or simply moving Bitcoin between different wallets or platforms, is crucial for understanding the underlying market sentiment. This divergence in institutional focus and whale activity presents a compelling narrative for the broader crypto market. If institutions are increasingly favoring Ethereum, it could signal a shift in the dominant narrative away from Bitcoin as the sole institutional darling. However, it's also possible that this is not an either-or situation, but rather a sign of a maturing market where different assets serve different purposes and attract different types of investment. Market analysts are dissecting these trends, looking for clues about where smart money is flowing and what it implies for future price action. The interplay between institutional adoption of Ethereum and the strategic positioning of Bitcoin whales creates a dynamic environment. Understanding these flows is key to navigating the complexities of the current market cycle and identifying potential opportunities or risks. But what do these on-chain metrics reveal about Bitcoin's immediate future? Get ready as we dive into the critical on-chain data that has investors on the edge of their seats. Bitcoin faces crucial on-chain test amidst investor caution. Bitcoin's recent price action has put investors on high alert as the cryptocurrency navigates a critical juncture marked by key on-chain weakness indicators. As the market grapples with mixed signals, a deep dive into metrics like the short-term holder realized price, SDH realized price, and realized loss reveals a landscape where short-term selling pressure is evident, prompting a bracing for potential volatility. The SDH realized price, which represents the average acquisition price for investors holding Bitcoin for 155 days or less, recently saw the Bitcoin price close below this crucial level. On August 29th, Bitcoin dipped below the approximately $108,928 mark, a threshold that has historically signaled increased selling pressure from more price-sensitive holders. This is not an isolated event in 2025. A similar breach occurred in February, preceding a roughly 20% correction. Analysts like Burak Kesmasi suggest that such closures below the SDH realized price often indicate a continuation of downward trends, potentially leading to significant price drops. Further complicating the picture are the realized loss metrics. This indicator tracks the total USD loss incurred when Bitcoin is moved on-chain at a lower price than its previous acquisition. During bearish market phases, a rise in realized loss typically signifies capitulation or panic selling as holders liquidate to cut losses. While the metric is currently showing declining profits rather than outright panic, it still points to a market where many short-term holders are sitting on unrealized losses, increasing the likelihood of selling if prices falter further. Despite these cautionary on-chain signals, Bitcoin has shown a degree of resilience, stabilizing around the $108,675 level. However, it continues to struggle against the psychological resistance of $110,000, remaining down over 5% for the past week. This divergence between on-chain warnings and current price stability highlights the ongoing battle between bullish and bearish forces in the market. The net realized profit and loss (NRPL) indicator offers another layer of insight, tracking the overall profitability of coin movements. Shifts from red net loss to green net profit often signal potential market reversals. Currently, the signals are mixed, suggesting that while the immediate panic hasn't set in, the market sentiment is far from overwhelmingly bullish. Historical patterns suggest that breaches of the SDH realized price can precede deeper corrections. However, the recent price stabilization and the nuanced signals from NRPL indicate that a sharp September sell-off is not a foregone conclusion. Investors are advised to closely monitor these on-chain metrics, as they are critical in gauging the sentiment of short-term holders and the potential for further price discovery. Could a strategic move by a major index provider be the catalyst Bitcoin needs? We're breaking down the potential impact of an S&P 500 inclusion on Bitcoin's trajectory. Analyst predicts S&P 500 inclusion to boost Bitcoin. A prominent market analyst has put forth a compelling prediction. Bitcoin is poised to experience significant benefits from a strategic inclusion within the S&P 500 index. This potential integration could represent a watershed moment for the cryptocurrency, potentially unlocking new avenues for investment and further legitimizing its role in the global financial system. The S&P 500, a widely followed benchmark index, comprises 500 of the largest publicly traded companies in the United States. Inclusion in this index is a significant achievement for any company, often leading to increased visibility, investor demand, and a more stable valuation due to the passive investment flows that track the index. For Bitcoin, gaining a spot in such a prestigious index would signify a major step towards mainstream financial acceptance. If Bitcoin were to be included in the S&P 500, it would likely involve a structured approach, possibly through financial products like ETFs or by directly holding Bitcoin as an asset within the index framework. Such an inclusion would expose Bitcoin to a vast pool of capital that is currently mandated to invest in S&P 500 components. This could translate into substantial inflows, driving up demand and potentially influencing its price appreciation. Furthermore, an S&P 500 listing would enhance Bitcoin's credibility among traditional financial institutions and a broader investor base who may have been hesitant to engage with digital assets directly due to regulatory uncertainties or perceived risks. It would provide a regulated and familiar pathway for participation, lowering the barrier to entry for many. Analysts are closely examining the feasibility and potential impact of such an inclusion. While the exact mechanisms for Bitcoin's inclusion remain a subject of speculation, the prospect alone is generating considerable excitement. It's a scenario that could align Bitcoin more closely with traditional asset classes, potentially reducing its volatility over the long term and integrating it more deeply into the established financial ecosystem. The analyst's prediction hinges on the growing recognition of Bitcoin as a distinct asset class with unique properties, including its scarcity and decentralized nature. As institutional adoption continues to grow, the pressure on index providers like S&P Dow Jones indices to include digital assets may increase. This move could be seen as a natural progression, reflecting the evolving financial markets and the increasing importance of digital currencies. This development, if realized, could redefine how Bitcoin is perceived and integrated into investment portfolios worldwide, marking a significant milestone in its journey from a niche digital currency to a globally recognized asset. But what about the fundamental driver of Bitcoin's value, its inherent scarcity? We're exploring how institutional demand is directly impacting Bitcoin's limited supply. Institutional supply absorption fuels Bitcoin's scarcity-driven growth. In the dynamic world of digital assets, the concept of scarcity is a fundamental driver of value. And for Bitcoin, this principle is being amplified by significant institutional supply absorption. Analysts are closely watching how large-scale adoption by institutional investors is impacting the availability of Bitcoin, potentially creating a powerful catalyst for price appreciation. Bitcoin's design inherently limits its supply to a maximum of 21 million coins. This fixed and predictable issuance schedule is a core tenet of its value proposition, distinguishing it from traditional fiat currencies, which can be subject to inflationary policies. As institutional investors, including major corporations, investment funds, and asset managers, allocate capital to Bitcoin, they are effectively removing a portion of the circulating supply from the market. This process of institutional supply absorption means that a greater percentage of the available Bitcoin is being held by entities with a long-term investment horizon. Unlike retail investors, who might trade more frequently, institutions often adopt a buy-and-hold strategy, reducing the overall liquidity available for trading and potentially increasing price volatility in the short term, but contributing to long-term scarcity. This action directly impacts the supply-demand equilibrium, where increased demand coupled with a diminishing readily available supply can lead to upward price pressure. Analysts are pointing to this trend as a key factor in Bitcoin's potential for future price growth. As more institutions enter the market, they not only bring capital, but also a degree of validation and stability. This increased demand from sophisticated investors can counter the speculative tendencies often associated with the crypto market, grounding Bitcoin's value in tangible investment flows rather than solely market sentiment. The narrative of Bitcoin as a digital store of value, often compared to gold, is gaining traction precisely because of this scarcity. The more that institutions recognize and act upon this scarcity by acquiring and holding Bitcoin, the stronger this narrative becomes. This creates a virtuous cycle where institutional adoption reinforces the scarcity argument, which in turn attracts more institutional interest. Furthermore, this trend is particularly relevant in the context of macroeconomic uncertainty. As traditional markets face challenges, assets with fixed supplies and decentralized governance, like Bitcoin, are increasingly viewed as hedges against inflation and systemic risk. Institutional investors are therefore not just speculating on price appreciation, but are also seeking to diversify their portfolios and protect against potential devaluation of traditional assets. The ongoing absorption of Bitcoin supply by institutions is a critical indicator for market participants, signaling a maturing market where fundamental supply-demand dynamics are increasingly influential. This trend is laying the groundwork for potential scarcity-driven price appreciation, making it a pivotal development to watch. And that wraps up our deep dives for today. Don't go anywhere, we've got a lightning round recap and a full call to action coming right up. And that's a wrap on today's essential updates. We saw Ethereum gaining serious institutional traction, while Bitcoin whales made their moves. Bitcoin's on-chain metrics presented a mixed bag as investors braced for impact. A major analyst predicts S&P 500 inclusion could be huge for Bitcoin, and institutional supply absorption is seen as a major catalyst for scarcity-driven price gains. If you found this valuable, smash that like button, subscribe to Bitcoin Bulletin for more crucial updates, ring that notification bell so you never miss a beat, and let us know your thoughts in the comments below. Follow us on all social platforms to stay connected. We'll see you in the next one.